Hello friends, there are certain tax planning tools which we are going to discuss in our video for salaried individual during financial year 17-18. That means any individual earning income from salary up to rupees 10 lakh are not required to pay any taxes. So as you are aware, in India, tax burden are more on salaried class. So to avoid such burden, we will discuss certain tax planning tools. So, if we talk about tax planning, it can be divided into two categories. First is salary restructuring, and the other is investment in tax saving scheme. So, first of all, we would like to know what is salary restructuring. If any person restructure his salary in such a way that his tax outgo would be less by availing of exempt allowances, benefit or reimbursements. So in the Income Tax Act, there are certain allowances and reimbursement that are exempt from tax to certain extent on the basis of certain conditions. Let's start with the allowances, which can be claimed as tax exempt. In this, number one is HRA, that is house rent allowance. HRA benefit can be availed if you are residing in a rented house. You can also pay rent to your parents. However, parents will have to file their income tax return to avoid any litigation. For claiming HRA exemption, following documents are required to submit with the employer. Number one is rent slip, rent agreement, PAN of the landlord if annual rent is exceeding 1 lakh rupees. So there are certain formula on the basis of which HRA exemption can be calculated. So least of the, that is the lower of the following would be the HRA exemption. Number one is actual HRA received. The number two is 50% of the basic salary where the house is situated in any of the four cities of Delhi, Mumbai, Kolkata or Chennai, and 40% of the basic salary in other cities, or rent paid less 10% of the basic salary. This travel allowance, which is exempt up to 19,600 per annum for meeting employees' expenditure for the purpose of commuting between office and residence. Number three is children education allowance. It is paid for education and hostel stay of employees' children up to 1200 per annum for education and 3600 per annum for hostel. The same can be claimed for maximum of two child. Number four is leave travel allowance, that is LTA. LTA is paid for travel expense and can be claimed as tax expense twice during a block of 4 years on submission of actual bill. Please note that current block will be completed on 31st December 2017. Next is reimbursement. There are certain reimbursements which are tax exempt. Number one is medical reimbursement. It is exempt up to 15,000 per annum on submission of medical bills. Number two is telephone or internet reimbursement. It is exempt on submission of bills. There is no limit on as per Income Tax Act. However, employer may impose an internal cap such as 24,000, 36,000, etc. Now we talk about second leg of tax planning, which is investment in tax saving scheme. There are many sections that are listed by the government such as section 80C. You can claim or invest under section 80C up to rupees 1,50,000. Investment can be made in employees provident fund, public provident fund, fixed deposit, tuition fee, life insurance, repayment of home loan, principal component, national savings certificate, equity savings schemes. Next is section 80D, that is health insurance. You can claim 25,000 of deduction for paying health insurance premium for yourself, spouse and children. You may also claim 5,000 for presumptive health checkup. Further, you can also claim 25,000 of deduction for health insurance premium for your parents. This deduction can be 30,000 if your parents are senior citizen. That means total deduction is 55,000. Number three is section 80E. Interest on loan for higher education for yourself, your spouse or children. That means you can claim a deduction under section 80E if you have obtained any loan for higher education. Number 4 is 80G. Reduction on account of donation to any trust or charitable trust or any other approved fund Deduction can be 100% or 50% depending upon the fund. Next is Section 80 CCG, that is Investment in Rajiv Gandhi Equity Savings Scheme. It is applicable or available for individual whose annual income is less than 12 lakh. In this fund, individual can invest maximum of 50,000 and deduction is only 50% of the amount invested. That is, if you are investing 50,000, the deduction is only 25,000. Section 80 GG, deduction in respect of rent paid up to 5,000 per month subject to certain conditions. However, individuals who are claiming HRA exemption are not eligible to claim 80 GG deduction. Now with the help of illustration, we will explain you the above discussed concept. Let's assume individual is earning 10 lakh per annum. Tax on such income after giving slab benefit is 115875. So, if individual restructure his salary on the basis of below components like basic salary, HRA, transport allowance, children education allowance, leave travel allowance, medical reimbursements, residential telephone or internet, employer contribution to PF, special allowance. If the individual has made the following investments such as Section 80C, 80D, 80CCG, 80G, 80E and rent paid 25,000 per month. So because many of the components are exempt from tax, the total taxable income is 5,76,500. So after claiming deduction, taxable income is 2,76,500. Basis of above taxable income, tax payable would be 1,325. So if your total income does not exceed 3.5 lakh, rebate under section 87A is available. So your net tax payable would be 0. This is the HRA exemption calculation for your reference. Thank you friends. If you have any query, please feel free to comment.